Welcome back, everybody, to Be the Trader. Today, I have a very special guest. It's kind of out of my element, but I'm very excited. Some of you guys have probably heard of him before in the past. He started out, I believe, and he can correct me once he gets started, in terms of the penny stocks, but now he focuses on algorithmic trading, and more so on the Forex market. Now, with that being said, this is today I have Matti O. He's also not only just a trader, but he also teaches and helps other people become successful. So, Matti O, Matt, Triforce Trader, welcome to the show, man.
Thanks for having me.
For sure, for sure. Did I say that right? By the way,
So the one thing you got wrong is I don't trade forex. I trade the futures market,
there we go.
which includes currencies, but I don't trade forex. A lot of people are under that assumption. It's okay. Just like a lot of people think I'm a Tim Sykes student, which I've never been.
Oh
It's
snap!
just it's just a misinformation of delusion. So
Please, because let's start there before we go anywhere else. Because I was one of those people who thought you were a Tim Sykes student. So let's start there. What help me?
okay, so I started being, I'll just go back to the very beginning.
Sure.
So
Yeah.
I started uh, learning about the market when I was 15. And the reason I even knew about the market back then is because I entered a trading competition at school under one of my professors or teachers. He liked to be called professor sometimes. He said that, hey, if you win this stock market competition, you don't have to take my final exam. And I said, yes, sir, dude, your class is so hard. I'm not trying to take that exam. I'll get destroyed. So I entered, and this was really when computers were becoming a thing. So maybe I was like 13, 14. I don't remember. It's so long ago now. And basically, I researched Apple at the time. Steve Jobs was coming back, and I put all my money in Apple, and I won. And I turned $1 million account to $2 million. And I just remember sitting there being like, holy shit, I did nothing. And I made $1 million. Even though it was fake money, I was like, you can do this in the real world? This is insane. So I was hooked after that. And I spent 2 or 3 years like just studying the market and watched CNBC, read books, all this stuff. And I just was dumbfounded. I was like, how the fuck does anyone make money? Like, how do you do this? And then, so I was 16, 17 at the time, and I go into my library. Remember, back then, computers were just becoming a thing, okay? So they were putting all these books in the library in bins to throw them in a landfill, but you could take them, take any book for free as they built out computer stations in the library. So I'm rummaging through this book bin trying to find something on trading, and I find this book called Don't Sell Stocks on Monday. And I was like, that is a weird title. And so I started reading it, and what this guy was doing was basically quantifying the market from like, hey, if you buy 3 days before Christmas and hold 5 days, going back to like the 1900s, it works 60, 70% of the time. And then, so at 17, 18, I graduate, go to college, talk to my best friend who is becoming a computer programmer, and he's like talking to me about all the things he's going to do. And I'm like, oh my God, this can be applied to the market. And at this same time, I watch, Wall Street Warriors, and this is where my first introduction to Tim Sykes ever comes to be. And I was like, oh wow, look at this kid. He's like only a couple of years older than me, and he's got a hedge fund, and he's acting like a jackass, and it's pretty entertaining.
It was entertaining.
It was entertaining. But at the same time though, while I saw that show and I'm in college, I had insomnia. So I would go to school all day, and I'd work the graveyard shifts from 12 a.m. to 6 a.m. At the dorm, where I would let people in who forgot their key cards or whatever. And I would teach myself how to program, and also like continue my research on the markets. So eventually at that same time, okay, where I saw Wall Street Warriors, I look up Tim Sykes too, and I find this site called Profitly. Okay, now Profitly had just become a thing. This is 08, 09. All right. I'm 30 years old. I know I look like I'm a 12-year-old or a 16-year-old, but I'm 30. Okay. So 2008, 2009, I'm 18, 19 years old. I graduate. Okay. And, you know, I'm 23, 24, don't really know what I want to do with my whole life. I went to school for psychology. I had a double bachelor's in psychology and linguistics, and I thought I wanted to become a therapist or a forensic psychologist. A forensic psychologist is basically someone who does jury selection, but also hunts down serial killers. That's what intrigued me the most. So, and I'm still doing this trading stuff, learning at night, when I could after school and working. And I had a girlfriend who was just like a mess. Okay.
Yeah.
So I graduate. And then in the year of my graduation, I find out my mom has pancreatic cancer.
Mm.
And she ends up dying in 9 months.
Oh my God, dude. Sorry to hear
And
that.
yeah, and she like left me some money from like her life insurance policy, and I told her what I wanted to do with it, which is like I was doing this trading thing, and she was like, "Oh my God, you're still doing that?" Because when I was younger, I asked my parents like once about the market, and they gave me like a response in which I was like, "I will never talk about this with them ever again." um, and so I told her, and she was like, "Yeah, do what you want. You only live once." She's like, "Look at me." I was like, she's like, "I'm bedridden. I've done all the things I want to do. Like, go off and do what you want." And so I took half of that, and I put half of it in the bank, half of it into a trading account, and then I started trading the strategies I had come up with in the last 10 years, basically, that I couldn't really put real money behind. And then I started posting my trades on Profitly, and people started to notice. They're like, well, "How are you doing this so consistently?" And so then I got an email from Tim Sykes that said, "Hey, you're doing great. Um, I've heard about your story, blah, 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 blah." And at that time, I was like starstruck. I was like, whoa,
Yeah.
And he was like, "You should really start a newsletter and we can sell it on Profitly." He's like, "You have like this unique take on the market."
Hey guys, I just want to take a moment to share with you some awesome news. I just started a newsletter, and you're probably like, what's so awesome about that? Well, it's not your typical newsletter because I'm going to give back to you, the people who subscribe to the newsletter. Number one, you will be getting updates on my YouTube exclusive videos, the podcast episodes, and articles and blogs all about trading. But how is it different? I'm going to give back to you guys. I'm going to select randomly different subscribers who are in the newsletter and give them either the opportunity to have a one-on-one call with me. Maybe I'll give them a free trading book, one of my favorite trading books, just to name one, Trading in the Zone. And also, and not only, because there's many, many more ideas that we're going to be doing and implementing. But another idea is maybe win the Billions box set. This popular show on Showtime, Billions. If you don't know about it, definitely look it up because it should be everyone's favorite show if you're a trader. At least it's one of my favorites. So I want to give back to you guys because you guys mean a lot to me. And I just don't want to only provide content, but I want to say thank you, right? And I provide content by saying thank you, but I also want to say thank you by giving back. So thank you guys, and you guys take care.
And so that's how I kind of got involved. To go back just a little bit, when my mom died, and I got I've handled all her affairs, I started trading. And at the same time, I also joined Superman's
Yeah.
thing, only because Superman was posting like 500,000 verified gains. I was like, how in the world is this person doing that? I wasn't really into his techniques about stuff because I'm a quant in that sense. Like, I like to have a statistical backbone in anything I do, even from way back when, since I discovered that book. And that's all I had been researching up to that point, in penny stocks, futures markets, and a little bit into options, although option math was way beyond my intellect. I just couldn't grasp it at the time. So I then make a newsletter on Profitly. The problem is, yes, I was trading penny stocks in the past, but when I started a service, I was like, I can't do that with my clients because they're not going to be able to do anything I can do. And so I was like, well, I got all of these other strategies in the futures market that I'm also trading. And so I was like, I'll just focus on that, and that will be my niche.
Mm-hmm.
so then I go to conferences with Tim Sykes, and that's where people like find out. And then so somehow during all of that, people kind of just paint me with the same brush. I'm some like penny stock trader, which is partially true, but it's not like the whole truth, and it's not really what my service was about. And then, as Tim grew, like he became, in my opinion, more erratic in his marketing, which I had never seen that in him before. Um, and in 2018, I decided to leave Profitly. I was never a Tim Sykes student. I only ever went to Penny Stock Silver, I believe, just to see what it was about. And none of that stuff even comes close to what I do or what I think about markets. And then so it's been like 2 years now, and I've kind of just been on my own. And but the real problem with being on Profitly is like, that's all penny stock traders, because his marketing is so large. And for me, I was like, and they took half of the profits of your newsletter. I mean, that was a huge chunk, in my opinion, for not really marketing me or doing anything that they said they were going to do. So I just got fed up with it and I just left. And for the other reason too, is you can never shine when you're sitting on another man's sun. Like, you just can't do it. And his influence was so huge, and good for him, but it wasn't about me or my branding. And even you just said that you thought I was like a Tim Sykes student. He never said that in any of his interviews. I don't know how people got that. It's just because I did one interview with him.
Yeah.
And so that's really the whole truth of the whole
Interesting.
story.
No, I appreciate you sharing that, because it completely changed everything of what I thought already. So that's awesome. I mean,
Mhm.
it's crazy to me. First off, so sorry to hear about your mother. I don't know what I just imagine. I can't even imagine. So I apologize. I'm just so sorry to hear that.
Yeah, I
Um,
appreciate it, man.
for sure. And to hear that you started so young and picked up that book and Don't Sell on Mondays, which I'm very curious about now. So I'll probably read that. But
It's
Don't
an
Sell
old
on
book,
yeah.
so
And you picked up that book, and then you started this journey where it sounded like through that whole process, you said about 10 years you were studying different ways to trade, but you didn't really have the opportunity to actually put real money behind it until you had this extra money that came in. And when that happened, you were able to put money behind it. So you're telling me this whole time, were you just like paper trading, or were you just like watching and just
so I was programming and coding and testing strategies, but in Python, which back then Python was nothing like it is today. um, and so yeah, I was basically backtesting different ideas with market data or free market data that I could find on different things.
so
So
you know, that's crazy. You had so much patience
mhm.
to not, just it's like you had 10 years of just back testing, 10 years of just complete studying before you placed a trade. Whereas me, like, I freaking started trading the week I found out about trading, like it's just crazy to me how
Well, the thing is
much
that
studying you did.
yeah, because the thing is that we're money. The idea of money in our society is completely twisted. People have unhealthy attachments to it, and just like in anything in life, like if you're gonna put your time and your effort, like you need to really hone your skills. Like, when people are like, oh, I've been studying the market for a year, it's like, that's peanuts. That's absolute peanuts to me. I'm not trying to offend anyone. It's just
Yeah,
like,
yeah, absolutely.
that's trash. Like,
I think uh,
um
I think I agree with you, because I was talking to Phil yesterday, Phil Godeker, and he was like, "How long you been trading?" And this was before we record. I said about 3.5, 4 years, and he's like, because he's been trading about 20, 15,
mhm.
20 years, and he goes, "Well, about at the same time when I was trading about 4 years, I thought I knew a lot, but now I knew shit."
Yeah,
so,
exactly.
so
Exactly.
yeah,
And so for me also, like, you have to keep in mind too that back then also, like, there wasn't that much information about trading. I mean, we were all literally, any of us that were like interested in trading between 2000 and 2010, like, we were all just winging it on like books, like obscure things that we were reading in books. There was, like, yes, Google existed, but it's nothing like it is today. Tim Sykes became so famous because he was, in my opinion, one of the first people that like really made investing or anything sound fun. And here was this like, crazy dude.
Hmm.
But really, in the end, there wasn't that much competition. That's why he became so big. And now I would say that it's oversaturated. Like we've gone from the one extreme to the next. And so now there's just this preponderance of garbage out there. So it's kind of like a weird, I grew up in a weird era like that,
So,
like,
so what I want to know, because I'm very curious to share a little bit about the idea, the difference between me, like a penny stock trader that just short sells, right? That's all I do,
hmm.
and and you who you say quant algorithmic trading. Can you give me an idea of what that literally means? I know you said you have computers or programs that trade for you, but what does that really mean? And then how do you develop that?
Okay, so I've watched a lot of your stuff, and a lot of people talk about Excel spreadsheets and these kinds of things. That's ancient stuff.
Thank you,
Okay.
by the way, for watching. Appreciate that.
Yeah, of course. I really, I'm just going to give you, I'm just going to talk about you for a second. I really like the energy that you bring, and you're kind of happy go lucky and not really judgmental. And so I really like that.
Thanks,
And then
man.
you also get other people's like opinions, which is very important, of these different like newsletter services, just hearing from like common people that are like, yo, this is garbage. And this is what I liked, and this is what I didn't like. So
Yeah.
it's very honest in that way. So
Thank
I
you.
really like that. Okay, so the difference between me and you is that I would say that you're probably a discretionary trader, and what that means is that you're watching the market day by day, in and out, and you are making ultimately the decisions. And you may have some kind of like backbone of statistical analysis that, let's say, if today's open is greater than yesterday's high by 50%, and the stock moves another 25%, what is the probability of shorting it 25% up? That's okay. But the problem is that you are manually entering that stuff into an Excel spreadsheet. And on top of that, just like ducks, okay, because ducks and I are very close in terms of being friends, just like ducks, he still ultimately makes a decision. He's not taking every single trade that fits that statistical pattern, which is dangerous, simply due to the fact that you don't know which one is going to be a winner and which one is going to be a loser if you're tracking data. So instead of doing that, what I do is I program a computer that can look across all these markets and come up with a strategy that can then present an equity curve or a back test of how that strategy performed in the past. And then what I do is I also validate that strategy by making sure that it can work in the future. The greatest disadvantage that you have is that you guys only have a couple hundred examples, and you only have a couple of patterns. I have hundreds of patterns. So I think it's actually over thousands of patterns now, that can be tested, validated, and see if they can work going forward in time. Because remember, any kind of backtest that you run, those are the past winning lottery tickets. That doesn't guarantee that the future will look like the past. Now, the flip side of that idea is that you are in the penny stock market, and that is a much more unsophisticated person trading. Therefore, those patterns will most likely persist going in the future, versus when I'm trading in the futures market, I'm trading people that are generally more sophisticated and arbitrage simple pattern recognition away.
Hmm.
So the difference between me and you is I systematize my ideas, I backtest them, I validate them going forward in time to the best of my ability. Nothing is guaranteed. And then I automate that process to where a computer is actually taking the trades for me, stop loss, exit, all that stuff across different asset classes, therefore reducing my risk, increasing my return, and ultimately, uh, hopefully, making 20 to 50% on my money at the end of the year.
Is it mainly like is it just trading, like are you is it more so like is it mixing like day trades, swing trades? Is it
Hmm.
all kinds of stuff that's
Yeah.
happening
So
throughout
the
the
market,
year?
yeah, because so I'll have different portfolios of strategies. So one
Gotcha.
portfolio will have like a characteristic of like volatility regime. So it will trade, let's say, the S&P gold and oil futures contracts, and then but it's based, the core idea behind that is a volatility regime. So like average true range, if the average true range does this and this, there's a bunch of different factors that go into that, then buy or sell, the S&P gold and oil. There may be other portfolios that are more intraday in nature because patterns do exist on smaller timeframes. The hardest part about intraday trading is, from a quantitative perspective, is getting the correct fill. Because if your average trade is only, let's say, $150, but your slippage is $50, well, guess what? You're fucked. Like it doesn't matter if the edge exists. If you're getting misfills all the time, then that's like a problem that has to be overcome. So um, because from my point of view, you don't really know what regime the market is going to be in. Okay. So maybe like in this last year, we've been in a very persistent volatility regime. But the next year, we could be in a low volatility regime. And that also dictates certain strategies that only work during that regime. But you don't know when that regime shift is going to happen. You only know when you're in it. So you have to have different strategies, trading on different instruments across markets that ultimately grind out a return over, the year.
So are you do you do anything manually now? Like in terms of like obviously you do the manual work to create the system, but
Right.
like to do any, I know you said at the beginning too that you trade penny stocks too, but you mainly focus on helping people with the futures.
Mhm.
So with the like on the penny stock side, are you trading or you use quants too or algorithmic? Is that the same thing? Quant algorithm? Is it if I say
Yeah, it's like
okay,
it's
interchangeable?
synonymous.
Okay,
Yeah.
gotcha.
So the thing is that in the penny stock world, okay, like you can't necessarily, I'm not going to say you can't, but from like, on any given platform, you can't actually automate that easily because you have to change the ticker symbol. But you could definitely write a strategy, like take 100 penny stock symbols. Let's say you take all the supernova patterns, you put them in, their like a text file. Then you take all 100 of those, and then you have like, let's say, 5,000 different signals. So a signal is like today's close is greater than yesterday's open or something like that. And then you mine across all of that data, and then you find a common strategy that works across all those supernova patterns. And then when you do see a supernova pattern, then you can put that strategy on there, and then you could
Mm.
technically automate it. Or if you understand like Python or C++, you could technically have something that scans the market, pulls in that ticker data. Then if it meets those qualifications for that strategy, then it can actually trade from Python. So it will send an order to the brokerage through an API, and then you can actually buy and sell.
So
But
you
that's
never, so you never had any, well, maybe I'm ignorant here, but I'm assuming you don't really have the challenge that the average trader has that day trades in terms of like the psychological challenge, right? Like the challenge of taking entries too soon, cutting before your risk is hit or your profits, or
right.
FOMO and all that. Does that happen to you?
That's
Like,
that's that's 100% correct in that sense. I'm not saying that I'm impervious to stuff like that. I'm not a machine, but I just have been trading for quite some time now, where I've done all the work. I've done all the research. I just need to like let go and let it do its thing. And so being a quant in a way is my way of letting go and letting the market do what it needs to do, and not really getting in my own way because I think I'm more intelligent than the market somehow.
so when people come to you and they want to learn this style, like like let's say I'm coming to you, right? Because I'm coming from the penny stock world. You said you got a lot of people who come from the penny stock world, and they feel like what should I expect? Like I come to you and I'm like, all right, Matti O, What's going on, man? Show me what's, like, what
Yeah,
should I
so
expect?
so in my class, I teach people to program, test, validate, build strategies the best way that I think is the correct way of building them. If you take all of my courses, it's like over 100 hours of stuff basically, but
Woo.
it's not, it's not when I'm not doing it to like bullshit you. I'm doing like, it's 100 hours of stuff like that you need to know to get you from like point A to point Z. So by the time you leave that class, like you should have a real good understanding of what it is to create strategies, what is a back test, validating those strategies, how to do it, how to automate, all of that stuff.
Could it
And
be something that someone could implement what you teach them into, like, I maybe not small cats, but like big cat
yeah, of
market,
course,
like
of
big cat?
course.
Okay.
So you need to understand something. When I would go to these conferences with like Tim Sykes and all of this, okay, I I was the original sin of quantitative analysis in the penny stock world. So yes, Michael Good would like get up on stage and he would do his kind of uh you know kind of mass stuff, but ultimately like it wasn't research back tested edges in the market. And now I find it hilarious that something that was not even in that space all of a sudden has become like everyone's like, oh, I'm using statistical analysis. And it's like, okay, but no one in that space had ever even heard of that until I came along.
Mhm.
And Dux is a byproduct of that in the sense, like, I'm not saying I taught Dux, but he was definitely around during that time when I was doing that. But what he does is still he uses an Excel spreadsheet, which is fine. I'm just saying you can make it your life simpler
Easier.
by programming it,
Yeah.
and just having a computer pull all that data and do all the things that you want instead of keeping track of every
And
single little thing.
manually, and
Yes.
yeah, because that's, dude, that's not me. That's annoying. I hate it. I do it, but I hate it. That's the worst part.
Because you have to think about your life in terms of like finite years. You only have so much time on the earth. Do you really want to be spending your time sitting there doing that stuff for the rest of your life? Or do you want to spend the time to learn how to make it like in a program that you just, after it's built, you just run it and it does it for you?
So when you say back test, so this is a topic that comes up a lot in terms of questions from many people, and I have to must say and admit that, like, the way I ever back test, if I even can call it that, was pretty much just over 4 years of taking pictures of every fucking chart I've ever seen, and
Hmm.
then I have 4 years, worth of charts, and I just go back and look at them all, then put them into an Excel spreadsheet. If I traded it, I analyze it, and then in the future, after I figure out what works, this works, this works, then in the future I start to see if it does work, right? Pan out, and then I start trading it. Like, that's
Hmm.
not back testing, I don't think, to me. That's just how I do it. Like, that's how I figure out where's an edge for me. But can you explain like what you mean when you say back
So,
test?
okay, so let's take 20 years of data. Okay, so what I would do is I would tell the computer, I'm just going to give a simple example.
Sure, yeah.
So if we're trading the E-mini S&P 500, so from the close, okay, I would program something that says, okay, look at this bar's close. Now, if the S&P drops 50 points, okay, from that bar's close, buy that, then sell it on the next bar's open. So what that's going to do is it's going to go back through time of all the data, and then it's going to look at each of those times when that happened, and then it's going to produce an equity curve of what that looked like if you had done that in the past. And that would be a back test.
How long does that take? Like, whenever you
I could
figure out
like
what you
if
want,
we
and then you
I
say,
could do
"Put that."
this in 1 minute for you.
Oh snap! So it's real quick.
Well, yeah, that's like a simple example. Yeah.
Yeah, but still, I'm saying, like, once you
Mhm.
figure out what your parameters are, and then you
Right.
set those into motion, say back test, how long does that back test portion take? Like, it's
Oh
pretty.
yeah, it's pretty quick. It
Oh
takes like
wow,
a minute or two.
damn. And then how? And then
your your face is
no, no,
priceless.
and then the forward test, because you said
So
you're
yeah,
trying
so
to. Yeah,
these are tests that
what does that mean too?
okay, so when you look at a back test like that, right? yes, it came from your mind of what you wanted that test, like what you were looking for, and then you're like, oh wow, this is great. But the uncertainty is that we know that the market will come in a different order. Because remember, your equity curve, you have to think about it like this: the equity curve that you see in that back test is, like I told you before, the winning lottery tickets,
Right.
of the past. And though that equity curve is built off of the sequence of trades in which that order came in, that order of
Sure.
sequence will never happen again, ever. It's rare.
Yeah.
Okay. And so what you have to do is come up with methods to, like, disturb or try to break the equity curve. So like one thing you can do is say, okay, if the open, high, low, and close of the data set in which this equity curve is built, if I adjust it by 40%, so you just take the high, multiply it by 40%. So now it's a different market, right? Does the strategy still work? Right? Because technically that's what's going to happen.
Yeah. Well, it should be different because you're
Yeah,
changing it.
so that's what I'm saying. So this is what we call validation tests, where we come up with a strategy, then we try to break that strategy to make sure that we call it robust,
Yeah.
to make sure that if the market comes in a different sequence, well, yeah, we should have a good probability that it will work. No guarantee, but if we do all of our work correctly, we should have confidence that going forward through time that the strategy will hold up.
Mm.
Okay. Another way to do this simply, and one of my favorite ways, is let's say you have 20 years of data. You withhold 3 years or 2 years. Okay. So let's just say two. So now you have 18 years of data.
Sure.
You build a strategy on those 18 years of data. And then what you do is, once a strategy is built, then you put it on the 2 years that you left out. And if it continues to work, you're probably in good shape, because especially in this day and age. So if you make a S&P strategy and you withhold 2018, 2019, and 2020, and you make a strategy and it continues to work in these last 3 years, I mean, it's probably robust,
Yeah.
because you just had so much up and down movement in the market that it's probably going to be okay. No guarantees. Every
Yeah.
strategy eventually, it does. I don't know. I've never had a strategy like completely die. I've had strategies where they just bleed money for long periods of time, and then it slowly works itself back up again.
What is long
That's
periods of time?
so the hive mind strategy, which I've been posting on Profitly for 4 or 5 years. So that's real time out of sample. So meaning, like, it's real time performance trading one contract as the strategy took trades. It was just recorded on Profitly.
Cool. I
So
don't know what that is. I don't look at properly. So I was
oh,
just,
okay, yeah, no. So Profitly, what I did was is like, so I do have strategies that people can like trade that I
yeah.
made, because there's three kinds of traders. There's traders who want to learn, there's traders who don't want to learn, and then there's the people that are just kind of like, I don't know, like I just don't know. So so I have these strategies just to prove like I know what the fuck I'm talking about. So I allowed people to trade like an autonomous strategy for like the last 4 years, and I've kept a real time track record of how that's performed in real time.
Oh, okay.
And so it's returned like $150,000 or something on one contract, which is like the lowest you can trade in the futures market. So it's done good in real time. And that's really the true test of any strategy. So it hasn't broken down in the sense like it's gone negative and it's completely broken. Like it
Okay.
just doesn't work anymore.
So that comes up to a topic of, and before we wrap this up, I'm going to ask you this. I want to know your thoughts on, you know how you hear people say like, you hear one side of the coin, he says strategies come and go, and then the other side of the coin, he said these strategies always been the same. What are your
Mhm.
thoughts on that?
I think it's somewhere in the middle, not to be, you know,
Politically correct.
yeah. But you see, like, there may be strategies that during, like I told you before, there's different regimes in the market, right? So there may be strategies that work now, but let's say for the next 2 or 3 years they don't work, and what ends up happening is people just throw the strategy away. Well, that's not necessarily a good idea, because it could come back Do you know what I'm saying? You don't
Yeah.
know. And so I don't think strategies really ever go away. Like,
Like forever. Yeah.
yeah. So like,
It's
one
more
thing
like a cycle.
yeah, I think the whole world is cyclical in that sense. Like, time is an illusion. It's linear and it's like an
Oh, here we
illusion.
go. Here we go.
Okay. So, um,
That's a going inception. I'm dreaming.
yeah. So it's like when I listened to one of your interviews with, like, I think Dux and Gertani, or I can't
Yeah,
remember.
it was Dexter Gritani.
Someone said that if everyone trades the same strategy, it will disappear.
Yeah, I don't know if that's true.
That it's not true, because the thing is that there's a dispersion factor in the market now, which means that there are so many strategies now that the dispersion of strategies that work, yeah, they're not as great as they used to be, but people are trading all different kinds of strategies that unless you had $100 million, you're not going to break that strategy. It's just not going to happen. Do you know what I'm saying?
Gotcha. Yeah.
And in the penny stock world, this is even more proliferated, because in short selling, for example, like, to give you a statistic on shorting a penny stock, and penny stock defined as $1 to $10, it's a shit company and it runs 100% from one day over.
Hmm.
So if you were to short at any given time on something like that, if you held that for a year, if that was possible, you would be correct 80% of the time. Okay. The problem is that is a protected edge. And what I mean by that is that not everyone can short. Therefore, that strategy
Mm.
will never die, because not everyone can do it,
Yeah.
simply because it's protected. So
Like the
everyone
barriers
may
to entry and all that.
exactly. So there may be strategies, like, for me, people say, Matt, you're trading in one of the hardest markets to make money in, because it's, all these sophisticated people, and like none of this shit will work. The problem is that a $1 billion hedge fund can't trade my strategies because they're too big.
Mm.
So the strategies I find is not something a hedge fund can trade, and the strategies a hedge fund can trade, I can't trade. So there's a clear linear barrier between, like, strategies for me and strategies for them. And then you have to think about how unsophisticated the retail space is. I mean, I'm the only retail quant that I know that, like, trades the way I do, except for maybe David Bergstrom, who's like my friend. And, that's it. Like, who else is doing this shit? Like, nobody, in
Yeah,
my
I haven't
opinion.
heard of that. Yeah.
Yeah. So,
That's crazy. I think I'm glad you said that because you made it sound way better. I just think no one could do it because the fact is, you know how hard it is to actually do what you say you're going to do when you see the opportunity come and do exactly the way you're supposed to do it. Hard as hell to where 99.9999% of everyone will all trade different. Like it's just not going to happen where we all do it the same.
right. And you bring up another valid point, which is the point of, like, even if I gave you my strategy and I told you all the rules, how can I guarantee that you're actually not going to interfere? And I can't. Right.
Yep. Yep.
So that's the other antithesis to that, if you will.
Well, look, Matti O, I know I'm probably gonna have a lot more questions. I'm definitely gonna have a lot more questions, so I'm probably gonna have to bring you back in the future. But
Yeah.
first
Thanks for
off,
having me.
absolutely, man, it's been so fun. If there's anyone out there who wants to ask you questions or wants to learn more about you, could you let them know how they can do that?
Yeah, you can find me literally on any platform: YouTube, Twitch, Twitter, any of that, Triforce Trader, or you can email me, triforcetrader@gmail.com.
Perfect, perfect. Well, thanks again, my friend. I appreciate it.
Not a problem, man.